Hello everybody. At this time we are talking about receivable management. Account receivables refer to the outstanding invoices or money which is yet to be paid by your customers. Until it is paid, such invoices or money is accounted as accounts receivables, also known as a bills receivables. You need cash all the time to keep your business running smoothly, and ensuring the accounts receivables are paid on time is essential to manage cash flow efficiently. And as the term suggests, management of your account receivable is called receivable management. Basically, the entire process of defining the credit policy, setting payment terms, sending payment follow-ups, and timely collection of the due payments can be defined as receivables management. And then, what are the main objectives of receivable management? There are the main objectives of receivable management. The first, timely collection of payment. The primary objective of amounts receivables management is to ensure the timely collection of outstanding payments from customers. This involves setting clear payment terms, sending invoices promptly, and following up on overdue payments to minimize delays in cash inflow. It will help to bring timely payments to the organization. And then second, improve financial reporting. Effective accounts receivable management ensures accurate and timely reporting of accounts receivable balances. This objective involves maintaining up-to-date records, reconciling customers' accounts, and providing reliable information for financial statements, audits, and other reporting requirements. And then third, minimize bad debts. Another objective is to minimize bad debts or uncollectible accounts. This can be achieved by conducting proper credit assessment before extending credit to customers, establishing credit limits, and implementing effective collection strategies to reduce the risk of default. And then fourth, optimize working capital. Accounts receivable management contributes to optimizing working capital, which is the capital required to fund a company's day-to-day operations. And then we move to aspect of receivable management. There are some important aspects of receivables management that a finance manager may consider to improve the growth of a business. The first aspect, credit policy. Credit policies are rules and regulations that a company may set while selling goods or services on credit. A credit policy may comprise decisions based on credit standards, credit terms, and collection efforts. Determining credit policy may involve several things such as deciding the total duration of the credit, which is the credit period, and the cash discount the customers may get. And then second, credit analysis. Credit analysis can allow you to determine the credit worthiness of a particular customer's or business. It is the documentation that allows lending organizations to determine if a customer is eligible for credit. Credit analysis can play a significant role in risk management and assist finance professionals in managing portfolios of clients. It may also help customers by providing detailed insight into what a company expects from them to offer the credit. And then we move to the benefits of effective receivables management in the business. The first benefit enhances customer satisfaction. Any innovative actions of an organization directly contribute to overall customer satisfaction. It is vital because customer satisfaction is the primary element for good business relationships. Through different lending channels, companies can support their customers who currently have limitations in purchasing products or services on a full cash basis. And then second, helps administers the market competition. There is a high demand for efforts in the global market competition today. The receivables management process comprises information analysis about market trends and their corresponding requirements. It assists businesses in forming appropriate lending policies based on the existing market offers. Rates of credit services are adjusted accordingly by companies based on their customers' needs. And then third, improve sales and profit generation. Receivables from unpaid transactions are still part of a competitive sales generation. Effective receivables management improves not just the sales but also the company's relationship with customers. The comprehensive credit terms and conditions will secure the sales profit of the company until the debtor can settle and complete payment balances. And then we move to the function of receivable management. The first function evaluates customers' credit ratings. Receivable management evaluates its customers' borrowing capacity and repaying ability for determining their credit ratings. It approves any credit facility to its customers after analyzing their information both qualitatively and quantitatively. Proper investigation of client details helps in reducing the credit risk. And then second, lower cost of credit. Receivable management helps business in lowering its cost of credit by limiting the credit amount and credit period for its customers. It performs all processes such as acquiring credit information of clients and collecting all due payments in an efficient way which lower the overall cost associated with credit facilities. And then third, minimizes investment in receivables. It reduces investment in receivable by ensuring optimum funds are available within organization at all the times. Receivables management decides proper credit limit and credit period for avoiding any bankruptcy situations. Attempts are made to collect account receivable as soon as they become due for payment, which reduces the overall investment in receivables. And then fourth, maintain efficient cash. Maintenance of efficient cash is crucial for the survival of every organization. Receivables management properly records all cash inflows and outflows of a business. All credit facilities are extended over analyzing the capability of organization, and due payments are collected timely. This results in steady cash flow within the organization. I think it is enough. Thanks for watching.